Brought down by bad mortgage investments, Lehman, which has 25,000 employees, will be liquidated.
The federal government loans American International Group, AIG, $85 billion.
This is a different kind of market, and the Fed is asleep.
The federal government is stepping in to stabilize Fannie Mae and Freddie Mac, the two mortgage giants that have been threatened by the housing crisis.
The Bank of England has pumped £75 billion more into Britain's ailing economy with a new round of quantitative easing.
You print a couple $1 trillion, and all of a sudden, people start to worry. So out of this worry, we have something called the Bitcoin.
Welcome to On the Brink. I'm Matt Walsh.
And I'm Nick Carter.
And what a crazy week. We're at all-time highs as we record this.
Well, not quite, Matt. The all-time high officially, I'm looking at it now, looks like the all-time high is about 23,753 or thereabouts, and we're currently a little bit below that.
Oh man, it's a crash.
Yeah, we're crashing.
Oh man, it's so bad. I mean, it's been a pretty crazy week. I mean, these type of weeks are when people really start to engage, and you see a lot of people that are on the internet saying that they're big fans of Bitcoin that we haven't really heard from in a while or ever.
Yeah, it's a free engagement week. If you're a Bitcoiner, you can get really cheap engagement. So I'm not going to tell everyone my strategy, but I've really been farming it with some low quality tweets this week.
Yeah, well, you got to do what you can. It has been a busy week on the content front, though. You sat down with Amber Scott on Monday, talked about banking and crypto landscape up in Canada.
Yeah, this is our new series. So basically, I think I'm going to call it Choke Point 2.0. So basically about why crypto firms historically have had such a hard time getting bank access in not just the US, but in a whole bunch of different countries. So we're going to go deep into that.
Yeah, I enjoyed that one.
Yeah, Amber is really great. It's kind of hard to get people on the record for that topic, which is maybe not that surprising. You were on the Encrypted Economy podcast.
That was a lot of fun. Encrypted Economy is a new podcast with ErisX, so it was one of the first guests he's had on that one, which I recommend. Definitely go check that one out. And then you wrote an article for CoinDesk, nationalizing stablecoins won't improve financial access. Talk a little bit about this.
Yeah, so this is my rebuttal to the Stable Act. So, we've talked about it on this show many times, but I figured I would get something in writing, and same points we kind of made on the show, honestly. I think there are good ways to potentially regulate stablecoin issuers. I don't think bank charters are the way. Maybe more flexible approaches like the fintech charter, which Brian Brooks proposed, or a unified model for money transmitter licenses at a federal level like Coin Center proposed. Both of those are very reasonable approaches to the problem. I don't really think forcing all of these fintechs and stablecoin issuers into the bank template is the right model. So that's what I said in the article. And 10 minutes after I posted it, Rohan Gray, who apparently was involved in writing this bill, was all over it, and he had a whole thread. I wonder if someone at CoinDesk tipped him off.
He hopped right on it. Well, that's what happens if you live on Twitter, I guess.
Yeah, if you're an academic and you write bills all day, maybe that's your day job, is to look out for any critiques, any criticism, and respond.
One of the several things that I think we got wrong on the podcast, or I should say I got wrong on the podcast last week, was around how these stored value Starbucks and Dunkin Donuts gift cards would be treated in-app purchases. It seems like they would also fall under this bill.
Yeah, so we were jokingly saying that, gift cards at coffee shops or your balance might fall under the aegis of this bill. It seems like it actually would, though. On Bankless, they talked about it. Peter Van Valkenburg from Coin Center actually discussed it too. And then the author of the bill, Rohan, also sort of confirmed on Twitter saying, hey, what Starbucks does is sort of on the edge of banking, which I found pretty entertaining. So he's basically biting the bullet on that one and admitting, yes, my definition of banking is so broad that it even would consider Starbucks balances to be effectively stablecoins.
I mean, you hate to see it. First, Stephen Lynch goes after the fintechs, and then he goes after Dunkin' Donuts. You do hate to see it.
I mean, I've never used a Dunkin' app. Is there an app?
There is an app. It's not as good as the Starbucks app, but it is an app, and it's usable for sure.
The Starbucks app is great. So I joked that I made a stablecoin transaction the other day when I used the Starbucks app.
The Starbucks app is a game changer. It really is. Yeah.
It's excellent.
Dunkin' app is kind of the same thing.
Well, so that's our stable act content for the week. I'm sure we'll probably keep talking about it forever. It's a never-ending content vein. Is this just inane attempt to regulate crypto constructs under legacy structures? So they're not going to stop.
Yeah, there's going to be more content there for sure. Why don't we move into some deals of the week? It was a busy week on that front. So Paxos, which is the New York-based custody and exchange platform, they do a bunch of stuff. Really early company, so they've been around for a long time. They raised $142 million Series C from Declaration Partners, PayPal Ventures, Ken Moelis, and others. So congratulations to these folks. They're powering actually the PayPal effort right now. So a lot of things going on at Paxos.
That's right. And if you want to check in on how PayPal's volumes are doing in terms of people buying Bitcoin on the app, apparently they're routing the order volume through ItBit, which is Paxos's exchange. Is that true?
I was wondering about that actually. So you can see the ItBit volume on TradeBlock, but I don't know if they're executing it directly on their exchange, or they also have an OTC desk there. So I mean, I guess theoretically it would all be hitting the exchange at some point, but I'm not sure if that's reflected in the ItBit exchange volumes or not.
Well, the volume definitely rose after the product launched, so that much is clear. But yeah, it may well be off exchange as well. Anyway, huge round for them. They have come a long, long way. They also administer a bunch of stable coins. They have kind of a white label stable coin service. Really consequential firm. The next one is another big deal, SBI Financial Services, which is the big Japanese conglomerate. They acquired B2C2, which is a crypto trading and market making firm.
Yeah, this is a template of things to come, I think. I think you're going to start to see more and more existing quote-unquote traditional financial firms acquiring some of these infrastructure companies because it really will help them get to market a lot quicker. And B2C2 has been around for a long time. And this could be maybe they're moving into more of like a prime offering here over at SBI. Could be interesting. They've been investing in crypto asset businesses and crypto assets directly for a while now.
Next up, we have Swivel Finance. They're a decentralized protocol for fixed rate lending and interest rate derivatives. They raised $1.15 million for Multicoin, Electric, CMS, Divergence, Alex Pack, and some others.
And the next one is the Canadian mutual fund manager CI Financial. They did a $72 million public offering for their Bitcoin Access vehicle. Bitcoin Access vehicle is very hot right now.
And lastly, we have Math Wallet, which is unsurprisingly a wallet company. They raised $12 million from Binance, NJC, Amber Group, and some others.
So those are the companies this week that have raised capital. And usually when you raise capital, you start hiring people. So if you're looking at this industry from the perspective of getting involved and joining one of these companies, that's who has money.
So we could do a whole other deals section on large funds that have bought Bitcoin this week. That might be our third section of the show here because it seems like there's more and more every single week.
Yeah, I guess let's hit on a couple of them, and then I want to talk about MicroStrategy after that. So it's been a busy week on that front. So I guess the Bitwise Crypto 10 Index Fund started trading this week. They've had record volumes, certainly a huge premium there on that product. I think it shows you the retail appetite for this asset class, really. So that was one.
Yeah, and to their credit, the Bitwise folks have been very transparent. They put out a press release saying, hey, keep in mind, there's a premium and there's a NAV. It's on their website. So they're not concealing the fact that there's a really stark divergence between the premium and the asset prices underlying.
Yeah, it's just more reason why we should have a Bitcoin ETF, really, at the end of the day.
Every single one of these dislocations, all of the premium on these trust products, it's just more instances where the SEC could engage in harm reduction and protect consumers by approving an ETF. So It really is a consumer protection story. We had an interesting announcement from Ruffer investment company, and this was sort of misreported at first. We weren't sure if the allocation to Bitcoin was 15 million or closer to 740 million. Turns out it's the latter. So they bought $740 million worth of Bitcoin, which is 2.5% of the investment group's assets.
I mean, that's a lot of Bitcoin.
It's a fair amount. And what I found interesting was what they said about it too. So it's not enough just to buy Bitcoin these days. You also have to sort of do your justification. So obviously Michael Saylor has created hours and hours of content explaining his decision. Ruffer put out a note saying Bitcoin acts as a hedge to some of the risks we see in a fragile monetary system and distorted financial markets.
It's pretty succinct. Yeah, that's succinct.
Yeah, and so I tweeted about it that it seemed like they were buying it not out of excitement or FOMO, but out of a desire to actually protect the value of their portfolio, so a defensive position. So it's really interesting to see the narrative shift around Bitcoin.
I mean, you can love Bitcoin for more than one reason. There's a lot of reasons to love it.
Yeah, nobody has a purchase on or a monopoly on what Bitcoin is. Critics often say that the narrative keeps changing, but as Joe Weisenthal, or was it Tracy Alloway that said that's actually a strength?
She did say that, yeah.
The narratives are always changing. So that was after Meltem convinced her to buy Bitcoin.
It's true. I guess the last one in this category is the CME announced that they will launch Ethereum futures on February 8th, 2021. So the ETH fans will love that.
So a word of caution about CME futures.
Yeah.
It was 3 years ago to the day that the CME Bitcoin cash settled futures. And you know what happened after that?
It just becomes a lot easier to short once you have that product out there. Price discovery becomes a lot more efficient.
Bitcoin drew down by 85%. 3 years ago today was the precise peak of the last Bitcoin rally. The precise peak. CME Bitcoin futures launched that same day. So beware. Beware.
Well, definitely good for just infrastructure development writ large.
Yeah, and there's no guarantee that futures would somehow cause the price to collapse, but I do love that correlation that the futures launched on the precise top of the market. There's definitely something to be said for that.
Yeah, definitely. All right, so let's talk about MicroStrategy. Last week, hand up, I think I was way off with my analysis of this. So I had a quick off-the-cuff take on why that convert note might not be the best product for an investor. And we got some inbound. We have some very educated listeners, and a bunch of them work on convert desks.
Yeah, so it turns out we have an audience of fixed income investors that we were not aware of, and they fact-checked us vociferously.
And I have to hand it to them because I get very frustrated when people opine without having a good foundational knowledge in how something works in the crypto industry. And I think, I was guilty of that. So hand up.
Yeah, we were caught over our skis there. So I guess we have to do more homework for this show in the future, or maybe just stick to the instruments that we understand.
So what we figured we would do was bring on an expert. So we have Spencer joining us, works on a convert desk. We're going to keep his name a secret for now.
So we're going to keep Spencer pseudonymous, but he understands the MicroStrategy offering. So he's going to come on and explain it for us.
All right. So we are very excited to have a guest on the podcast. Name is Spencer, and an expert in the U.S. credit market. We're not going to give the full name, but hopefully this doesn't become a recurring theme on this podcast, Nick, where I just make a very blatant, inaccurate comment, and then we just get emails telling me how wrong we are. So we had to correct it about the MicroStrategy news.
Yeah, we were wildly off base on the MicroStrategy offer. Well, technically you, but no one's pointing fingers on this show. But we did receive many listener comments, so it's great to know that there's some people out there actually listening to the substance of what we're saying. The bad news is we said some totally wrong stuff about the MicroStrategy offering, and we are now fixing that. We brought in an expert on fixed income to tell us exactly how wrong we were.
So Spencer, thank you, first of all, for joining the podcast.
Yeah, my pleasure.
So Spencer, why don't we just dig right into it? And, we talked about this MicroStrategy convert, and my perspective on last week's podcast was I I don't really see how this makes a ton of sense for an investor in this product. But talk us through it. I mean, why was that inaccurate?
Yeah, I mean, you made the point about the low coupon, and that is correct. I mean, it's obviously cheap financing from a fixed income perspective. But I think my interpretation of the deal is kind of twofold. First and foremost, it's kind of a brilliant capital market arbitrage if you're really bullish on Bitcoin. Like high level numbers, back of the envelope numbers on the ARB is, Saylor has a business that's now worth about 3.2 billion enterprise value, given the size of the Bitcoin investment. You need to value the legacy software business and the Bitcoin entities separate on a sum of the parts basis. So you have two parts. If you assume maybe the legacy software business is kind of 1 to 1.5 billion, and then you value the Bitcoin, the 40,000 Bitcoin that they own at roughly 20,000, or I guess maybe 21,000, looking like today. That's a $750 billion position in Bitcoin. So there's clearly a big gap between what the market is pricing the sum of the parts for the legacy software business and the Bitcoin position. So is a 1 to 1.5 billion premium versus the market? Is that really pricing in some sort of like visionary premium for Michael Saylor? I doubt it. So why not, from Michael Saylor's perspective, why not sell a stock or a convert, in this case, a cheap fixed income instrument with an option to sell the stock? Why not sell it at a 30 to 50% premium to the market and then buy Bitcoin on Coinbase or whatever rails he uses to purchase the asset? So kind of brilliant, in my opinion, if you're really bullish on the asset. I think secondly, it kind of just highlights the unfortunate state of the affairs at the SEC. They're trying to help retail investors, protect them from kind of what happened in 2017, I suppose. But the reality is you look at, the Grayscales of the world, the Bitwises of the world, and now MicroStrategy and demand as far as stripping supply. And professional investors only really fully understand, I think, these premium and discount to net asset value situations. So it's kind of an unfortunate example as to why we really need an ETF in Bitcoin space. So I guess maybe there's one other point, maybe if I think kind of strategically from Saylor's perspective, is maybe the virality of it all, based on the kind of the media deluge that Saylor got, why not continue that kind of the media headlines that he's gotten and do something else and kind of leverage that down the road. So I think that kind of thinking strategically, maybe that had something to do with Saylor's move here as well.
Yeah. So Spencer, those are great points. One other thing that I think I miscategorized last week was just around, how this would convert, and specifically the bondholder having the option to convert was something that we didn't talk about. So, without maybe prognosticating too much into the future, if Bitcoin takes off from here, how would you envision this would play out on just that convertibility feature? If Bitcoin goes much higher?
Yeah. Like I said, the conversion premium, or the premium that the underlying asset is implying by the stock prices is material. It's something like 100%. So if you assume that premium remains, but say Bitcoin rallies materially, the stock will clearly continue to go up. And I forget the conversion price offhand, but at some point in time, once the conversion price is reached, the convert owners have the right to then convert into underlying stock. So that's kind of how the mechanics would work out.
Yeah, and clearly in that case, then it's a no-brainer to convert, and you'd be converting below the price of the asset.
Yeah, or perhaps from a institutional investor perspective, you'd be converting at a premium to Bitcoin, if the market was still inefficiently, say theoretically, if we still don't have an ETF and the premiums at Bitwise and Grayscale remain, then theoretically maybe you have a premium asset, and at that point maybe you have hedge funds looking to do the kind of the Grayscale trade, where they take advantage of the premium role. Just trying to think down the road.
So Spencer, given your knowledge of these markets, what is the kind of profile of investor that is actually subscribing to this offering?
I would say it's I'm not at a sell side desk, so I don't know the typical profile. To be honest, I would guess it is a combination of hedge funds, convert, dedicated portfolios, private wealth that might be limited to their ability to invest, in something like Bitcoin directly. Microstrategy historically hasn't been a convert issuer, and they haven't been in the credit markets. So it's a new name that's not well covered by long only institutional investors. So that would lead me to think that they would be less interested in it, would be more, the dedicated converts and the smaller, more dynamic hedge fund type investors that have a thesis on Bitcoin.
Is there something to be said for this being a fixed income instrument that is Bitcoin flavored, whereas there's been a paucity of those sorts of instruments out there in the market before?
I mean, it sets a precedent, but I think we have a long ways to go for this. I mean, Saylor's, as you know, he's the CEO, he's the founder, he controls the board, he's material skin in the game, he can do what he wants. So in terms of setting a precedent, it does, but I don't know if you can kind of extrapolate this as a trend that I would expect to continue if I had to guess.
How about a trend at MicroStrategy? I mean, is it possible to imagine a world where he does this again in 6 months?
Yeah, I would think so. I mean, the balance sheet is not terribly encumbered. It's fairly unencumbered, and particularly with 75 basis points of interest rate they have to pay. It's not a material issue. So yeah, there's plenty of capacity to continue to do it, which kind of puts the ball like we talked about earlier in terms of needing the ETF. I think if you think longer down the road, maybe there's then an angle for a backdoor ETF of sorts via MicroStrategies. Clearly this is me speculating here, but yeah, I mean, they could, if I'm just looking at the convertible price now, it's 104, 105. So 4 or 5 points up from the offering last week. Clearly Bitcoin's at all-time high, so that probably has something to do with it. But my point is that it seemed to be well subscribed.
Yeah.
And as you know, they upsized it 50 million from the original 400 million. So
right.
Serious demand there.
Yeah, I don't know if you can give an answer to this, but I mean, would you be a buyer of this instrument in your own portfolio if you were sort of hypothetically managing one?
Depends on your mandate. If you're a total return capital appreciation fund, then you clearly have a view on Bitcoin. But if you are a long only, long-term holding, carry, total return kind of fixed income strategy, less so. I think the one thing that really would make me nervous is again the premium in which the underlying assets trade at, right? So you have to make an assumption that that remains. So say we wake up next week and an ETF is launched, I would expect that those premiums across Bitwise and Grayscale and MicroStrategies to compress.
Right. Yeah. Right, because Bitwise, the premium is kind of 20, 30%. MicroStrategy, the premium's over 100%, as you said. Although the math is more complicated.
Bitwise is like 5x right now.
Yeah, I think I saw that. Yeah. So Grayscale is like 20%, I think.
Yeah.
So yeah, I would expect those to compress.
Well, Matt, we stand corrected. This is why, we've all got our circles of competence, and ours is pretty small, all things considered.
I am going to stay away from the U.S. credit market, but I'm very thankful that we have listeners like Spencer that are willing to keep us honest. So Spencer, thank you for coming on the podcast. Hopefully we'll talk to you again, but it won't be because I made some dramatic mistake on a podcast.
Well, thanks for having me, guys. Big fan of the podcast. Happy to provide my perspective.
Well, I'm glad we did that. He's certainly much more knowledgeable about this than you or I.
I feel so educated. And also, I feel like the Microstrategy bond offering is not such a terrible deal now. So,
yeah, now I wish I kind of did it.
I don't know if I personally would buy it. If you're a fixed income investor and that's your entire investable universe, and that's the one thing that's Bitcoin flavored, yeah, maybe it makes sense.
That's the key point, I think, is that if it's, within your mandate, then there's some asymmetric upside there.
So the other enormous news this week was, of course, Coinbase filing some early documents announcing their intent to do an IPO.
So it looks like this was they filed a confidential S1. Is that what I gather?
That's right. I can't wait to see the S1.
That whenever that comes out, that's going to be clear your day. Let's just check it out.
Yeah. And, the beauty, I think, of Coinbase being a public company, aside from, of course, being a good liquidity event for, thousands of individuals and just, an important milestone for the whole industry, is also we are going to get a lot of transparency into how Coinbase operates and their rate of adoption. And it's going to be really interesting just as an informational resource to see those quarterly disclosures.
Yeah, absolutely. I think this will be great for the industry. There's a few publicly listed market infrastructure companies, nothing on the scale of Coinbase. So this will be the biggest one by a country mile.
Yeah, and it'll be a chance for public market investors to really do their diligence on the highest profile firm in the space to form an opinion. And I think it's going to be an incredibly positive event. It's hard to see how it goes wrong. And I think this thing is going to kick off at a very, very healthy valuation as well.
Yeah, I'd expect that. So probably more to come on that, I'd imagine.
Yeah, the other potential interesting dynamic would be a lot of early Coinbase employees getting a liquidity event and then potentially having the financial freedom to start startups of their own. So you could see kind of a Coinbase mafia developing. There already is one actually in the industry.
Yeah, that's what always happens in these situations is just more capital flows into early stage companies, more angel investing, more entrepreneurial activity. So it's just a huge net positive. And look, Coinbase's been at it for a long time. This will be a great outcome for a lot of people.
So what else do we have on the news front?
ErisX had an interesting announcement this week. So ErisX announced that they have filed self-certification to introduce fully collateralized sporting event future contracts with RSBIX, RSBIX. That's tough to say, their partner there. So basically the idea here is that the DCO license will allow Eris to clear derivatives for any type of commodity. And this sports-based futures contracts will be open to eligible contract participants under the Commodity Exchange Act, which could be sports books and vendors as well as sports stadium owners. It basically allows you to hedge commercial risk around sports books and attendance at games and cancellations for stadiums and things like that. So as that category expands, I think that having the infrastructure to support the futures contracts becomes really interesting. It's no different than a farmer hedging their exposure or a airline hedging gasoline and oil prices at the end of the day.
Yeah, and the way that the commodities laws are interpreted in this country is such that almost anything you can think of is a commodity, with some key exceptions. So I think onions are an exception due to a historical episode of price manipulation with onions.
I'm not familiar. I know that everything is a commodity, including you and I.
Yes, but not onions. There was an episode with the Onion King.
Who's that?
Well, he was an individual who, I guess, engaged in price manipulation of onions and kind of ruined onions for the rest of us, at least in the eyes of the CFTC. And then the other thing that's not a commodity, I believe, is movie theater bookings, because there are a bunch of betting markets that emerged for movie tickets. And for whatever reason, the CFTC didn't like that. I probably butchered that whole thing, but anyway, you get the point. Almost everything's a commodity.
I think we're going to have an onion expert come in and just over the top, and then we're going to have to do 10 minutes with an onion expert next week around how wrong you were about that commodity analysis.
Hopefully this doesn't become a trend, having to constantly issue mea culpas about wrong. I mean, cut us some slack. I think we should be able to allow to say, 3 to 4 wrong things per episode.
Yeah, well, in any event, I'm not a huge onion fan, but that's neither here nor there.
Yeah, they're not commodities, though. That's the important thing.
There's a few odds and ends this week. Did you see this Scott Minard? He's the chief investment officer at Guggenheim. He went on Bloomberg and they asked him about Bitcoin. They were about to click over to Jerome Powell's speech. And then he just comes out and he says, look, I mean, this thing is trading at about 20,000 and it should be worth 400,000. And he just stopped everyone dead in their tracks. Like there was an audible gasp on Bloomberg. They were like, oh, what? And they actually delayed cutting over to Jerome Powell as he finished his thought. And it was spectacular. I mean, it was like great television.
Yeah. It's good when they don't cut to Jerome. I'm now starting to think that when I went on Bloomberg, I should have just done that instead of, saying that the halving was priced in.
Well, I think, I think he was quite serious, and Guggenheim has efforts underway in the blockchain and crypto space, but this will become a trend where people will just start to compete for throwing out the most insane number that they can.
Yeah, maybe I don't necessarily have the credibility as a large investor to throw out a price target, but that's never stopped half of Bitcoin Twitter, so.
Yeah, that's true. Another thing that caught my eye this week was a speech actually that happened last week. So it was SEC Commissioner Hester Peirce in a speech to the Federalist Society, I believe, advocated for an embrace of the personal liberty ethos that underlies crypto, which I thought was really cool.
Yeah, I've taken to saying Bitcoin values are American values, which maybe sounds a little chauvinistic, but I actually do think it's true. And it's cool to see Hester speaking along the same lines. But, crypto really is about individual liberty, about rejecting, centralized control, rugged individualism. These are sort of core American values.
Cynthia Loomis had similar things to say on the What Bitcoin Did podcast this week, actually.
I still can't believe that when she was asked about her priorities for the Senate, I think the first thing she said was evangelizing Bitcoin to her colleagues.
Well, she's got her priorities straight, obviously.
She doesn't have any sort of pet legislation that she wants to advance. Nope, it's Bitcoin.
I mean, we need to get on this post. Now that there's a vaccine out, we need to start thinking about this Wyoming conference or just a big extravaganza out there.
Okay, Wyoming it is. We need to rewild the American West while we're at it.
Yeah.
Bring back the megafauna.
What do you think of the CB Insights Blockchain 50?
So that was pretty cool. So Coinmetrics is on there. Very exciting. Shout out Coinmetrics. We were also apparently one of the most active investment firms within that Blockchain 50 cohort. So shout out to us.
Yeah, BlockFi was on there. ErisX was on there. So that was nice.
Yeah.
So we're going to have 2 interviews next week. It's going to be a busy podcast week. We don't take a breath for the holidays.
Yeah, we're actually going to be releasing podcasts throughout the holiday season. Do not fear. We're going to be with you every step of the way.
Just as you're at home, just battling, telling people that this is not a scam.
Yeah, this is prime Bitcoin evangelizing season. You need to get your talking points ready.
So we're going to have Matt Hogan, the chief investment officer of Bitwise, on the program on Monday. And that was a great episode. Always enjoyed chatting with Matt.
They're doing awesome. And then on Wednesday, we're going to do Brian Venturo, CTO of CoreWeave, which is a really big ETH miner. You guys all enjoyed my conversation with Mustafa Yilhan, a industrial Bitcoin miner. I'm going to give you the other side, talk about industrial ETH mining. Really, really fascinating world. So full lineup of podcasts for you next week.
Brian Venturo, also very good golfer.
Is that right? Have you golfed with him?
No, I've not, but he has a solid reputation as a very good golfer.
I'm not a golfer myself. You like to golf.
I'm not good at golf, but I like to golf.
I just don't like things that I'm not good at. and I'm really not good at golf.
Well, you can always get good.
I don't know. It seems like it might be too late for me at this point.
So I think that's all we have for the week. Enjoy your weekends, and we will see you back next week.